Okay, I'd like to put on a few minute capital raising 101. We had a fun podcast yesterday with people that are doing like glamping and higher end RV parks. And so we kicked around. I also have multifamily friends that are raising money. And it just dawned on me, we could share our thoughts on how to raise capital starting from scratch. The key is building a track record, and you do that by doing deals. And so you got to start by going through a ton of deals, underwriting a lot of deals. I was reminded of how many deals the other day I looked at before we ever bought a single mobile home park. In 2008 and 9, we tied up several, took several to escrow, but never lost any hard earnest money or anything like that. We just would tie them up to go look at them physically, look through them up and down, utilities, meet with vendors, all that. You got to go out and look at stuff and be in the market to know what pricing is, how much things are to fix and operate, and test all of the broker's expense loads. And the key is to raising capital, having a good deal in your hand. Like, you got to go and find good deals. You can't rush that. And so because you don't want to buy any type of real estate asset that is not going to perform, and now you have to dig yourself out of a hole because the money you took from investors is not getting the return that they want. Not to mention, you're never going to make money because you're going to give all the investors their money back plus the little gain that you do make on a poorly executed asset. And so you want to focus on deal quality, find your niche, and then go take that deal out and raise money. When you're raising money for a good deal, you just have to run around with it and basically scream it from the rooftops that you have a good deal and go get into rooms. One of the fun ones I've heard of lately that we're now doing is family office events. You can go to with your deal in hand and do the people walking in and out of the doors, like the little diners or the little coffee shops in the entryways of the hotels that the conference center that is hosting that family office event. Go there and have meetings. Like, that's, people have talked about like those types of intro hacks, but it's not a joke. You can actually do that, and you realize that if you're present and you're running around and you're talking about something interesting and it's a good deal, it makes logical sense, that the capital will follow. So then you just start building a list of people and following up and getting meetings. And we close a lot better by showing and spending more time with the deal in hand and then going out to lunches and bringing them to the office. Like, it's so much more important building the relationship and building trust and having an asset that you truly believe in to sell versus just trying to get a few deals done. Because you're going to have to take those deals from start to finish and do them all the way through and generate returns. And once you can do that and put that together, start small. Like, I think people try nowadays, especially with, I love Grant Cardone. I'm a follower, but like a guy like him is always pushing you to go like really big. And I feel like you got to prove your track record and stay within a reasonable threshold of, if you can raise $1 million easy, then maybe you push to 2 million and you raise a couple $1 million for your first deal. If $1 million is not easy, you go buy a $1 million purchase price deal where you raise $300,000 to $500,000 and buy that and work to build a track record. The track record is more important than the deal size, because as you get bigger and as you put down a real track record on deals that you've done and you solidify your niche and what you focus on in the real estate space, you will then be able to grow exponentially on deal size, capital raising, all of it. We now, our internal discussion at Comfort Capital is, let's find good deals and stay focused on finding good deals. When we find good deals, we will raise the money a lot easier. And then while we're having downtime between deals, we're working on improving our processes, improving what we do for the OMs, making sure we have drone shots and really good photos every time we build our systems and refine our procedures to make sure that we have everything we want to continue to perpetuate the growth and the marketing on both the capital raising, but also the execution. And so there's always something to do. It's a busy world and a busy business when you start out and you're wearing a lot of hats. So you got to keep it simple. Keep it within the realm that you can raise money for on your first few deals. And good markets will pull you through the challenge. Whereas if you go out on the edge of town and out on the outskirts, now I call them, those are push deals. You are going to work your butt off to push that deal through the finish line for the next 5 years, 10 years. So try to find those markets that have the demand that pull you through, and that will make your life so much easier. All right, if you're enjoying this content, hit the subscribe button and turn on notifications, and check out the description below for our websites listed. Thanks a lot for joining.